Don't blame me.
He's on.
Hey
All
guys.
right. Hey. All right, I'm going to kick it off because we have a lot of people already and we got a lot to get into in the next hour. So thanks everyone for joining Options Talk. We got a special guest today, XO, Trader XO. Today is Wednesday, July 12th. Just to give a little bit of macro background, U.S. headline CPI came in today. So it's the 12th straight month of declines. It kind of rested at 3% below the peak of, what was it, a little over 9% in 2022. So it's the slowest pace of increase in the last 2 years. With that said, there's, in the prediction markets, there's still like a 90% probability that rates still continue to hike at the end of this month. But given the rate of decline, after this month, it's still it's unclear whether or not the second rate hike will still happen by the end of the year or not. 2 years at 473, 10 years at 385. BTC devol is at 43, and it's down 6% today. And then ETH devol is at 41, and it's nearing its yearly low, actually, I think, which was like right around 38. All right, Marty, over to you to take over.
I'm having a good day so far. I mean, we had the CPI print, sliding some more vol, short some more vol. Then I went for a massage, and now we're here talking with the pimp XO himself. XO, what's going on? Can you give a little background into yourself?
I'm good, thank you. Yourself?
All good, all good. Go ahead and give us a little background into yourself, and we'll do a little around the horn, do a little intro for somebody who's new to XO or new to Premia or new to Marty.
Yeah, sure thing. Before we proceed, just a special thank you to all you guys for giving me the opportunity to jump into what is undoubtedly going to be one of the best spaces around over the coming weeks and months, right, Marty? But before we proceed, just want to make sure that audio is all working good.
We got you loud and clear.
Perfect. Yeah. So, XO. Basically, I'm somebody who used to work in software development primarily as a full stack developer. Worked in investment banking for several years on front office, back office systems for a good part of 4 or 5 years. Eventually stumbled upon Bitcoin, obviously, whilst working within banking and speaking to various, guys used to invest in stocks, markets, and the odd person, Bitcoin as well. So that's kind of what piqued my interest. Initially bought some Bitcoin. At that point, I never really thought of myself as being a trader. I just thought, hey, let me just buy some Bitcoin. You look at all the media around you that Bitcoin could go to, $100,000. And back then when I first bought it, it was just under $1,000. I think it was around about 700. I'm thinking, if I buy 10, if it goes to $100,000, I'll become a millionaire. So that's kind of where the thought process was. And then started really looking to Ethereum in 2017, and really started looking at software development jobs within the blockchain space as a smart contract developer. But lo and behold, I think everybody caught the bull run. Well, some of us caught the bull run in 2017, made a boatload of money, and unfortunately, come January 2018, quit my job. Thought I was a good trader, but learned a few lessons from the market, and was soon humbled 6 months later, where I'm lifting my ass off the floor, going back to work, back to software development, whilst learning how to trade effectively throughout 2018 and the best parts of 2019 before, I finally managed to nail down a system after much pain, emotional roller coasters along the way. But here I am, several years later, been in the markets for 7 years now. Not just cryptocurrencies, but also taking an interest in global macro from a high-level perspective, which then allows me to effectively pick up trades on, global markets, equities, indices, FX as well, and occasionally commodities as well. But unfortunately, I don't have any options experience. But what's interesting for me is seeing you guys evolve in this space, because, I think one of the main reasons why I probably haven't played with options is the fact that the lack of availability or options markets within the crypto space. I recall Deribit primarily being one of the main options players, but again, it's just sitting down, understanding options, and then really getting stuck into the crypto space, as opposed to having to venture out into the markets. So I guess that's kind of where I am, and it is actually on the to-do list for the second half of the year to sit down, learn options, and utilize that in terms of trading, not just crypto markets, but global markets as well.
Nice, nice. I hear Marty is writing some master classes for Premia, so it'll be like a real life, not just like a theoretical, oh, when should I do this kind of trade? When should I put on this kind of trade? It will be full hands on what you're looking at, what you're going to trade, when you're going to trade it, how you would trade it, how you would position it. And yeah, we're happy you're coming into the option space. Options are the greatest financial tool to position yourself and to profit in any sort of market condition, right? So for all these people that have been trying to pick a direction since, I would say, FTX crash, options were probably the one of the easier ways, unless you were buying, right? If you were selling, options was one of the easiest ways to make money since then. Of course, you can pick up pennies in front of a steamroller only for so long. The vol regime shifts, and then if you don't become a buyer of vol, then you are essentially screwed, right? You'll be that guy doing the YouTube video telling everybody he's sorry and that he's family, or that you guys are family. I don't know if you've seen that video, but it's a classic. I got a question coming into how did you get into crypto Twitter? Because you're one of the bigger players in the space, large following. How'd you get into crypto Twitter specifically?
I think it was just by chance, to be honest with you. It was never my intention to become the account that I am today. I think back in 2017 when I joined crypto Twitter, I was quick to realize that it's great for information. It's great for news as well. It's if you can really decipher the bullshit that circulates on crypto Twitter, it can be a very useful tool in especially in bull markets in identifying valid sources of information, whether that's altcoins or what's happening out there in the bigger picture from a global macro perspective. And like I said, I started out in 2017 just to basically ascertain and get a better understanding of this space. And before you know it, I started contributing my views. And I actually recall early 2017 or late 2017, early 2018, starting to post charts. And it can be quite nerve-wracking because you can get scrutinized. You can be questionable. Why have you got this level marked out? Or why would you think this is going to happen? So it really does make you think. And one piece of advice that I would give to people is share your charts, share your views, put them out there. And what you're not seeking validation. You're basically sharing your opinion, but you also want to reflect upon, well, how are others viewing the market? Or what do others essentially view or scrutinize your setups. And I think that's one of the best ways to learn, in my opinion, is just put yourself out there. But not only that, I think looking back as well, it's a fantastic networking tool because you can really build relationships out there with people, with friends, establish solid relationships, partnerships. It really does open up many, many doors for you from that perspective. And I highly encourage it to anybody because I think everybody that I've met in this space, 95% of the people I've never met face to face, about 20-30% of them I talk to, on a daily or a weekly basis. I think it's just one of the best spaces where there's no barriers to entry, and you really can strike up some brilliant conversations from people from all walks of life, from all parts of the world, and it's just amazing, quite humbling that also, being a larger account, I try to be more, I should say, careful with what I tweet nowadays and the impact it can have on others who may follow my information irresponsibly. But equally, like I said, when you're traveling around the world, it's like, hey, XO, if you're in Italy, come and let me know. We can hang out, and it really is a fantastic social tool from that perspective. But again, it's how you utilize it. There's a social element to it, but there's also deciphering the right information, the correct information into a streamlined process that helps you make better decisions. So that's kind of how I started, and it just evolved into what it is today, just by chance, really. I never had this envision that, I want to become a large Twitter account. But I guess when you sat on the desk all day, sometimes if you're trading, when you're not traveling and you're just shit posting in between your trade setups, there's really not much else I can be doing useful in the UK, given that we always have 10 months of rain and probably one day of sunshine. So that's that really.
Yeah. The crypto Twitter space is interesting, right? Because there's people that have been here for years. There's new people that are coming in all the time. There's people trying to make these connections like you're talking about. It was funny because we just did the Marty Euro tour, right? We just finished. It was about like 6 months 4 months in Europe and 1 month in Argentina, I guess. And everybody's like, "Oh, come hang out, come get drinks. Let's have some hookah, some shisha." And I don't know. I hosted 15 people in Buenos Aires for a barbecue, and met all kinds of cool long term friendships just from crypto Twitter. And I'm relatively new, right? I don't know. I think the account's a year old, a year and a half old. I'm not too big, right? I'm still under 10K, but the quality of relationships here are high, I would say. Long lasting friendships for sure. Let's circle back into. Sorry, go ahead.
No, I was going to just, you pretty much hit the nail on the head there. I think the social aspects and the network aspects of Twitter by far, surpass any other kind of networking environment or platform that I've ever experienced, especially from a trading perspective, because, whether it's crypto Twitter, whether it's fin Twitter, I just think that the amount of information that you can absorb is just phenomenal. And the speed of information as well. It's pretty rapid. Twitter is very, very quick in that sense. The amount of information that you can collate in a short space of time. And to make sense of some very complex issues, you've got some great accounts out there that really do help break down the content into bite-sized, digestible, material. That kind of helps with the learning curve. And I think going back to 2017, 2018, Marty, when I first started, I can honestly say the caliber of trading information shared today on crypto Twitter and perhaps fin Twitter is phenomenal compared to what I had back in 2017, 2018. It's just a different level altogether. I think that in itself is a testament to this space, that there's so many good positive aspects within the space itself.
Yeah, the only issue is you have to filter out like the nonsense, right? I mean, there's probably like 10 people that I constantly check, and then there's, another 2,000 people that are just randomly shit posting, but that's fun, right? That's funny. That's entertaining to me, right? Especially when we sit at the desk all day and nothing's going on, or, there's no CPI, there's no FOMC, there's no new catalyst for crypto, and you can just shit post for, 2 hours a day, 1 hour a day, and, kills time really easily. I wanted to circle back into your trading preferences. I know you said that you're not into options yet. We're bringing you in. You're going to join the Vaultard soon. But are you mostly playing spot? Are you playing leverage? Are you 100x? Are you on gambling sites doing 1000x? What kind of is your go-to setup, and how much leverage are we looking at?
I think for myself, it's just mainly futures trading. The occasional spot trading, but primarily futures perps. Is essentially where I'm at. CFDs as well when it comes to global markets, obviously being based in the UK. So that's kind of where I'm at. In terms of leverage, I've never really looked at leverage, whether it's 5x, 10x. I'm not really one for trading on platforms like Rollbit where you can really amp it up to 1000x leverage. That's really not for me. I mean, I don't mind throwing some money at it and just having a blast, but probably not something that I would do anytime soon, to be honest with you. I've always just been sensible about risk. For me, the way I approach markets is from a risk-first perspective. And I think that is what allows me to stay within the boundaries of putting my foot down, but within identifiable or, risk boundaries that I've set for myself. So, I think when it comes to leverage, whether it's 10x, 20x, is irrelevant. I think what's really important to me is the type of trading setup I'm taking, and essentially position size is what really matters to me. People ask, so are you trading 10x, 20x, 30x? I actually trade cross, because I can then scale in, scale out, whether I'm going to be risking 5%, 1%, 10% if I really got high conviction on a trade idea. But again, keeping it very simple, that's not my entire account balance. I due to counterparty risk, the majority of my cash right now is safely guarded. So I only have limited funds as to what one would feel comfortable losing if the exchange was to pull an FTX or go tits up. So you have to think about risk in two ways. One is your trade size, your positioning, irrespective of leverage, and the second aspect is your counterparty risk. Which platforms have you got exposure to? Where are your funds? And I think when you approach the markets from a risk-first perspective, you tend to sleep better at night. is what I found.
Yeah. Go ahead, Togo.
I was just going to ask, do you venture into DeFi at all? And it sounded more like your home base is kind of CeFi exchanges.
I haven't really delved into DeFi as much as I would like to have. I think primarily because you can be the jack of all trades, master of none, but a jack of all trades is better than a master of one. I think for me, it's if I've refined a system that works for me, that prints money consistently, that helps me manage my risk, then I'm happy to stay within that comfort zone. Albeit, I have recently started to trade less, explore more, research the protocols, options being one, looking at the DeFi space, looking at the NFT space. I was a very big fan of NFTs before NFTs went batshit crazy in 2021. I was very, very early to the NFT space, but it's just very difficult. I think in this space, there's so much to cover that it takes some real dedication. I'm in my mid-30s. I've got a kid as well. So family priorities take precedence for me above all anything else. I'm not in my 20s by any means where I can just spend 16, 18 hours a day. So ultimately, it's more about utilizing the skills that I have now in a manner that allows me to become consistently profitable over a longer period of time. But having said that, I do believe that there are sectors within this space that are emerging. So I talked about NFTs. There's now on Solana compressed NFTs. I think that is something that's certainly going to catch on and maybe just kickstart the Solana ecosystem again. DeFi is another one. Again, I've been delving into various DeFi tools out there just to get a better understanding of markets out there, because again, I just think I made a tweet the other day whereby I do believe that DEXs will have a much significant role to play in the next market cycle, simply because of the constraints of counterparty risk and KYC and regulatory risk and regulatory enforcements on centralized exchanges, that we could see a trend where DEXs really do take much of that growth and liquidity, where you could see some really phenomenal returns. So it's trying to look for the asymmetric players. I'm sure DeFi has plenty in itself, but unfortunately, it's not one that I've ever mastered or nailed down. But it is one that I'm trying to get back into after quite some time away from it.
It's interesting you brought that up. The one thing that I found a struggle in DeFi as a very general, broad statement is that you literally have to read the documentation for every single protocol, even if you're involved in 3 or 4 protocols that kind of generally do the same thing. They probably all do it in different ways. And so that can be a very confusing process, whereas CeFi exchanges tend to have a more standardized process where there isn't, you don't have to go deep into documentation to understand how a trade is executed or how it works or how it's liquidated. It's a little bit more straightforward on CeFi exchanges. So onboarding there becomes a little bit easier than I think in the DeFi space.
Yeah, great. And I think, again, just not trying to limit myself here, but the fact that I can take a transferable skill into any marketplace, a chart's a chart to me. I don't care what the ticker is. Obviously, you have to pay some respect to the fundamentals, but ultimately, I can take my trading system and apply it to any market, whether it's commodities, indices, equities, gold, crypto, shitcoins, whatever it is. I've got a system that works well for me. So it's having. I don't believe I could say I've mastered it, because there's always room for improvement. But what I can say in trading, it's all about thinking in probabilities. Ultimately, thinking in probabilities and being disciplined, there for me, those two alone for me are probably my biggest edges. And we always see people seeking alpha, seeking edges, but the real edge, I believe, is in yourself and your self-discipline and your desire to be successful. Ultimately, if you've got that drive and determination, and you've got a systematic way of defining how you wish to approach markets, then you're setting yourself up for success, as opposed to having no plan and just winging it, jumping sector to sector, or going from DeFi to NFTs to whatever else is the next trend. It's not really structured, in my opinion. I'd rather be structured in terms of longevity, but recognizing that in a bull market that there's going to be fantastic asymmetric plays, perhaps in other areas of this space or outside of this space as well. And just being in the right place at the right time to take advantage of those, I think, is important. So you have to be open-minded in that respect as well, which is, like I said, I've taken a backseat from trading I said to myself at the start of the year, come the second half of the year, I want to slow down on my trading, maybe take 1 to 2 trades a week. And this is where options comes in, because options, I don't have to keep managing the trade. I can place a trade, understand some of the terminology. And I don't agree with people saying, options is really difficult. Nothing's really difficult. If people have got the right mindset to sit down and absorb and learn and apply and manage the risk during the learning process, then you probably come out on the other side much better for it. So, I don't believe in anything being difficult. I've been in software development for 10, 12 years. When I first started, I'm like, fuck, this is difficult. But eventually it's like a logarithmic learning curve. The learning curve is quite steep initially, but it smooths out eventually. And then it's all just about time and experience, and screen time ultimately, I think, is the most important aspect in this game.
Yeah, for me with options is the only issue for retail is that options are presented as like this black box. Only Voltards can trade it. You have to be a CFA like Tolga. You have to have a master's from whatever, Villanova or whatever, right? Some Ivy League nonsense. And it's like all of the questions on Twitter that I get, most of them, over 50% of them, they're pretty simple questions, would be answered by reading 2 or 3 books on my pinned tweet, right? Like the Marty book list. If you read one options book, you would probably have more expertise than 50% of crypto Twitter. If you spent a few months or even a couple of weeks learning options, the basic, I don't know, you want to hold Bitcoin and you want to sell covered calls, like a super simple, basically risk-free. You're not going to get blown out. It's not risk-free, but you're not going to get blown out of your total portfolio. If you spent, I don't know, 2 weeks learning that strategy and implementing that strategy, I'm not saying that that's the right strategy right now. I'm saying it's a strategy. Then you would be ahead of the learning curve on crypto Twitter by 100%, right? Like it would blow out of proportion. If you spend a few months, like you're talking about, XO learning options, especially how to use options to hedge. I think that's where it's going to come in for you the most helpful, because you're more of a directional trader. So instead of putting on these directional trades with options, which I don't necessarily recommend unless it's like a gamble or something, then you can use options to hedge out some of your risk pretty simply with, you don't need some crazy computer or AWS or something like this, right? You can do it yourself.
Absolutely, Marty, and that's primarily one of the reasons why I'm really looking to explore options trading. It's one of 2 reasons. The second reason being, again, I think if one can grasp options, and if we do see the adoption of Bitcoin in global markets, well, my question that I have, it's more of a rhetorical question, but it'd be great if you could answer this one. Is assume that Bitcoin does get wider adoption by global markets or financial markets. What role will options play on the future of Bitcoin outside of spot driving price? Will there be a time? Do you foresee a period where eventually options will have a significant impact on Bitcoin, just as it does in the equities market? And for me, I want to ensure that, one, I understand options, that if I need to understand the flows of options and how it impacts Bitcoin in 2, 3, 5 years' time, then I'm well positioned for that and happy to take advantage of that. But I'd like to know your thoughts on that. It's something that I've been thinking about of late, and just would like to know where your head's at with that.
Sure, yeah, Tolga, come in here and we'll ping off of each other. My simple understanding or simple my simple explanation is like when Deribit came out in 2017 or 18, options flow didn't rule the crypto market, right? And perps and spot volume was higher, and now options are taking a larger market share. It's not the same size of market share like it is in traditional markets, right? There's way more notional value traded of options in TradFi than there is in crypto. And in TradFi, there's way more notional volume of options traded than shares traded. So with a growing space and with the smartest people moving over to crypto vol space, it's now becoming something to pay attention to. Like, I don't necessarily think that oh, the max pain level, when you read this, the max pain level is 27,000 on Bitcoin because the options, blah, blah, blah. That's kind of nonsense. But you can kind of follow the flows. And Tolga and I talked about this last time. Like, maybe Tolga doesn't agree, he can talk. But Jeff from Greeks Live, a quote from him was that there's always an insider that comes in about an hour before some major news event and plays some major directional play. And that guy 90% of the time wins. So if you just figure out who that trader is, you can copy trade him and you could probably outperform fucking everybody, right? But if you don't know who that is, you can follow these flows. I don't know. If you follow the wrong flows, of course you're going to lose, right? You can watch that agger, right? Where it's like ding, 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 ding all day, right? And lose. But if you follow the right flows, you can sometimes copy trade these people and get away with it. I wouldn't recommend it all the time. I would come up with your own system, but options are bringing in are going to take over the space, or it's a growing space, I would say. I don't know if we take over per volume because it's not 100 Bitcoin per one contract, but for sure it's a growing space that will have larger market impact.
Yeah. I could add to that a little bit on, from a very macro level. I think options kind of serve three major purposes that you can kind of like think about. One is hedging that you guys mentioned. One is volatility trading, that Marty talks about a lot, and then there's speculation, right? And so, as it currently stands, it's my opinion that right now the primary volume is being originated from speculation. But in a mature options market, speculation as a percentage of all the volume and notional size is a fraction of the ecosystem. So if you take like a TradFi, traditional market, legacy market breakdown of volumes, it significantly comes from hedging and volatility trading. And so then if you dissect those two portions, hedging generally will come more from in terms of flows, will come more from mandated institutional accounts. So funds that might have a particular mandate that become natural buyers for downside hedging, or larger funds that are looking for yield enhancements and they're selling upside calls, just to kind of oversimplify it. Those people tend to be in size and they tend to be consistent. Right, so they can they're always players in the market. This is sort of where the phenomenon of skew kind of came around. Where downside and upside has this skew where there's this natural demand, ebb and flow of these markets. And then there's the volatility trader, which is more of like, volatility. If anyone's not familiar, options have many components that make up its price. Volatility is one of them. So like if the underlying product is more volatile, all things being equal, the option is worth more. Volatility is a little bit easier to trade than directional markets, mainly because of the fact that volatility is a mean reverting value. Spot markets can drift and they can go in one direction and they can stay in that direction, or they can stay at that particular price. Whereas volatility has much more stronger mean reverting properties, so people tend to prefer trading volatility for that reason. So that generates a lot of volume as well on legacy markets. And so I think, just to go back to your question of how would the options market look if there's this mass adoption from, from traditional markets and traditional capital, I think we're going to start seeing a lot more hedging and volatility-based trading. And I think that's where the market will start kind of shifting more from this like speculation-driven options market to a more hedging and volatility space.
Yeah, that makes sense. Makes total sense.
Tolga, I'm about to have to quit crypto.
Okay. If anyone's not familiar, I have this long-standing bet with Marty. Well, I don't know if it was a bet, but I asked a question to Marty about what would you do if crypto became a 20 vol product? And his response was he would quit crypto and he would go to traditional finance because there would be more opportunities there. And I don't know if you want to give some more color on how vol is right now and how you kind of see it, but it seems like it's down and to the right is where your tweets seem to keep saying it's going.
Yeah, I mean, it's been like the major last catalyst for vol was the ETH Chappelle update, and then before that was the FTX crash. So if you've been a buyer of options, unless you got lucky on these random spike days or weeks, essentially you've lost all of your money, right? If you've been a buyer, just a directional buyer of calls or outright puts, unless it was perfectly timed, uh, the vol regime was not in your favor, right? So usually vol builds up into an event, and then there's a vol crush after the event, which was essentially what we saw today. I don't know, we saw it go up to I don't know, 48 or something, 48 handle, and now it's 43 handle. Let me see, it's yeah, 43.25, and historical vol is 32. And for anybody who is new to that or doesn't understand what that means, traditional, what is it, SPX is a 20 vol product. It's essentially boring. It's pretty consistent. It doesn't have 20% days up or down regularly. You know, it provides consistent returns. Crypto is a high volatility or was a high volatility product. Usually we're trading in this 70 to 100 vol handle range. You know, I remember $10,000 Bitcoin days, you know, movements, $5,000 candles, fun times. And now my bet with Tolga is that if volatility, not historical vol or realized vol, but if IV drops into the 20s, I have to quit, and I can't trade that day until it comes back. For me, I'm mostly selling vol until the vol regime changes. You can't necessarily time the change of vol regimes. That's what people were asking on Twitter. How do you time it? Unfortunately, you can't time it. You have to look into the future and think, if is there a catalyst? The most recent catalyst, I wrote about this for Premia too. You can go back in the newsletters. The next catalyst is the halving in 2024 and the presidential elections. Besides that, there's nothing in the foreseeable future outside of a black swan that that brings vol back. If you look at the ETF hype and all of this stuff, BlackRock and Fidelity and everybody else, the market doesn't necessarily think that it's the right time, or you know, the SEC still hasn't come out with crypto regulations. And Tolga, do you really think, I think we talked about this last time, like, do you really think a 2x leverage ETF brings back vol to the crypto space? I don't necessarily think so. It's just them paper trading. It's not them having to
No, but
go out and buy physical coins.
No, I don't see it.
a spot might make a little impact, but like that's not gonna be overnight by any means.
Yeah, I think it's going to come more from like institutional adoption from like one area where I think you could see this is, so BlackRock creates these funds, right? That's great. People can invest in them. Where I think things get interesting is BlackRock has they do institutional management of, like, say, retirement accounts, right? And so they have to pick and choose what they buy. They have their own different mandates. But once crypto becomes an asset allocation for these portfolio managers via tools that the company has already built, aka like ETFs, that opens the door to some interesting possibilities, because then those PMs will have access or need access to what we just talked about earlier, was like hedging tools, right? And so that can create and open the door potentially for, say, options volume, right? So I think directly, it's not necessarily as bullish as I think people think it is, but it's just another step forward to unlock that institutional capital. And just echo what you were referring to before, I think it's just one step closer to that more larger frame adoption that's going to bring more just larger chunks of capital right into the ecosystem. But I think it's a trickle down effect. So it's always going to start on regulated exchanges and slowly feed its way to DeFi. And I don't know the time it takes from something to go from the most regulated and rigid infrastructure to the least. So that's still yet to be seen.
Yeah, right. Like you would think that vol would pick up and it would keep coming. Oh, everybody's happy-go-lucky, everybody's buying all the coins. BlackRock is coming, and nada, down and to the right, right? So until there's some, I don't know, black swan, hopefully
Well,
not. Go ahead.
I was gonna say, yeah, like the amount of like front running type of activity is like pretty minimal, and you still have to open up the spot ETF so the ETF creation process can begin. And like Bitcoin is a low float asset, and as those are accumulated over time, and let's say that if we get to a position where like your portfolio management companies says, hey, you should put 2% in Bitcoin, then like that's a lot of capital going into a low flow asset. And you could see that appreciation. It's not going to happen overnight by any means, but I could see it happening, like maybe quicker than we think, but it's not going to be like I don't think it's going to be a massive vol event. We might see more maturity in the vol spaces because these assets are now being held on a lot more portfolios, but it's gonna be a slow process for sure.
Yeah, everybody thinks like, oh, BlackRock or the SEC is going to change all of their regulations overnight, and they're going to come out with the crypto framework. The SEC is like the most anti-crypto they can be right now. The only reason that I think that the futures ETF comes in is because it's less susceptible to manipulation compared to a spot ETF. And I don't know if you need to read up on spot ETFs versus futures ETFs, then sure, go ahead. But a lot of people think like, oh, this future 2x Lev futures ETF is it. That's it. Well, just because of the name, right? BlackRock, right? It's the Rolls Royce of funds, right? So, or of money management funds firms. XO, what do you think about all this ETF jargon?
I think an ETF is interesting for Bitcoin, especially from a spot perspective, because the retail misconception is, hey, BlackRock are buying Bitcoin. Not necessarily. BlackRock will be making a market for their clients and offering Bitcoin as a way to get exposure to Bitcoin. So that's where there's a real win, in my opinion. Look, anything that allows for the greater adoption for Bitcoin, happy days. I'm all for it. If it means a step in the right direction, as Bitcoin being adopted, as we look at the 11 sectors of the equities market, could Bitcoin or some of the higher cap cryptocurrencies become a 12th sector? I'd love to see it happen, to be honest with you. I'm not anti-crypto. But ultimately, for me, it doesn't really make too much of a difference. To put it bluntly, I couldn't give a shit. If Bitcoin's trading at 2K and it goes to 10K, for me as a discretionary trader, that's a 5x. If it goes from 50K to 250K, then so be it. It's ultimately, to one extent, it's volatility that matters to me. And that's why I'm really curious about exploring options and volatilities within this space, because being a discretionary trader that traders on the perimeters of boundaries and edges and ranges where I'm looking for a reaction generally through order flow and price action, I'd like to see how that translates or how that transforms to an options perspective. If I'm assuming or playing the probabilities that this is going to be a good level to short, and we could see a volatility in price in terms of price mean reverts, then how can I then transfer those skills from a technical perspective and look to play options? That's what's more fascinating for me. So in terms of going back to your question about an ETF, I think as a global adoption, happy days. I could see Bitcoin certainly doing that, and more power to the people for in that regards. Do I think Bitcoin is going to be a future currency? No, I still believe it's just going to be an asset class that's traded up and down. I mean, is there really? I mean, when you look at Bitcoin, does it do anything other than just do people do anything other than just speculate on price? What can you actually do with Bitcoin? Does it give dividends? No, it doesn't. What can you do with it other than speculate on the price of Bitcoin? So I still don't think it fits that bridge, but we'll see what happens in the future.
Yeah, it's still a new space, right? There's still lots to come. There's still more financial instruments to be built. I don't know, not necessarily on the back of Bitcoin, but on the back of Bitcoin's price, either tracking it or a spot ETF or similar. I know Canada has an ETF through 3IQ. That didn't seem to necessarily do much. The volumes are still pretty shite, right? Still pretty low. Um, what's your current market sentiment right now after we had all of this, I don't know, ETF, after we had all of this CPI, after inflation's in the US is now coming down and inflation in the UK is essentially screwed? How are you looking at everything right now? Not just crypto, but could be anything, any markets.
I think for me, it's clearly evident from everything we've seen over the last 3-4 years that liquidity is a driver of markets, whether that's equities and whether that's Bitcoin. There's certainly some correlations there that are fairly enough significant to appreciate that liquidity matters. So, what does that mean from a crypto space, or what does that mean from a global macro perspective? I think ultimately, we look at CPI, we look at GDP. These are lagging indicators. They're hard data. I generally prefer to look at the soft data. One of my favorite metrics is the PMIs. And I think when you look at the bigger picture with rates remaining elevated, or if the Fed is likely to remain higher for longer, is it the last rate hike? Who knows? There could be a couple more. I'm not too sure. But the fact that the core CPI is still elevated, it's nowhere near the Fed's 2% target in terms of CPI in itself. I think also when you look at the PMIs, that growth is continuously slowing down month on month. You get the odd blip, in terms of PMI where you get a short spike up. But if you look at the overall trend, growth is slowing down. And generally, markets perform well in risk-on environments when growth is, expanding or remaining at elevated levels. Right now, growth PMIs are sliding lower down. Inflation is still a battle. We've seen signs of wage inflation despite CPI and core CPI coming down. And could it be the case where the year-on-year metric for CPI, we saw last June 2022, CPI was fairly elevated, it's quite high. Now, obviously, my expectation for the print that came out today was that I think we were going to beat expectations, and that was the case. But what happens in July? Could we see an uptick in the markets in terms of CPI? It remains to be seen. What does the Fed then do thereafter? I think also when you look at the yield curve as well, you look at the 2s, 10s, and the 1 month 10 and the 5/30s. They're heavily inverted. So I'm really looking for that disinversion across the curves in terms of their spread differential. And generally, having back tested this myself, when the curve comes out of inversion back in, disinverts essentially, it kind of triggers off a recession more times than not. It's got a fairly high correlation there. So just some cause for concern in that regards. But, in terms of where we are in the markets, I think, look, for the next 2-3 months, I do believe it's going to be chop and grind still. I think once we see a shift in unemployment, and once the Fed can get a grip on inflation and ensure that inflation does not have a second round or second bout of spiking higher again, at what cost? I'm not too sure. But if rates stay high, I think what we've seen in the first 12-18 months in this space is the result of the Fed hiking rates at a very aggressive pace, and we've seen the ECB and the Bank of England playing catch up as well. Like you said, inflation in the UK is still pretty much screwed, so I think the Bank of England are way behind the Fed, as are the ECB. So they've certainly got distance to go in terms of hiking rates. But ultimately, I think what I'm really looking for is the lack of credit facilitation, that borrowing is now much more difficult. And are we going to see the lag effects of credit tightening really start biting on the economy, on consumers, especially, revolving credit as well? So I think we will see those pains surface much later in the year. And could that cause a risk event? I'm not sure if it's going to cause a black swan event, but certainly some form of event that will cause, maybe a real spike in volatility. When I look at the VIX as well, it only takes a few weeks of extreme volatility to see a fairly significant correction in prices across equities. And if it's going to happen to the equity market, then I don't see how Bitcoin survives that. But is that something to be bearish about? Not necessarily. I think if that event does unfold in front of us, that we are heading into recession, then I think one has to be objective and take a step back and identify that is probably going to be one of the best buying opportunities you're likely to see before the Fed reverses course. And perhaps as a result of over-tightening, we'll have to cut some slack and eventually start some form of quantitative easing, I guess, heading into 24, 25, we'll have to wait and see. But looking at the Fed's funds rate and the futures curve, I can see that there was still, on Sunday, an 85% weightage to around about a 5.25 to 5.75, basis points in terms of rate hikes. So still, I do believe the market is possibly pricing in one or two rate hikes. I haven't checked the data since today's CPI. I've not been on the screens, to be honest with you. But once the dust settles, I'll have a look on Sunday and just see where we are in regards to that. But overall, I still think there's some headwinds and risks involved there, certainly.
Yeah, it's looking like they're pricing in two more hikes of 25 bips in the U.S. for the end of the year. I think that's been known for a while now. They've been pretty vocal about that. I don't know. Inflation in the U.S. is finally coming down. It's still going to be sticky. Rates are still going to be higher than people want. Yeah, I don't know. I think the U.S. is actually taking a better stance than, let's say, England, if you put them head to head. But everybody's still late. Everybody's still delayed. They're working on late data, right? I'm gonna do a little Brazil shill, but Brazil had super crazy low rates, like 2% on a 35-year mortgage that you could get, I don't know, 2 or 3 years ago. The world started to end. Inflation started to get, I don't know, 15%, 20%, something insane. And about 2 years ago, the Central Bank of Brazil started to hike rates, and now rates are in the 13.7, 13.5, right? So who's now buying a house today? I pray for them, right? But it's good for me because I get to keep my Brazilian reais in a bank account, and I get to collect that 13%, right? And that blows out anything, right? And I guess you have the FX risk against the dollar, but it's been pretty flat for the last 3 years. It's been about $1, 4 or 5 reais. So for me as a saver, it's okay, but we'll see how it trickles down for people trying to buy houses and refi and all that and coming into the future.
If you say there's a correlation between, say, equity markets and crypto markets, one of the things to keep an eye on is, it's common knowledge that the long-term average return of equity markets is somewhere between like 6 and 7%. And so the moment you have interest rates and savings that are at or greater than that amount, it disincentivizes capital flows into equities. And so in turn, that's going to be the same effect with crypto. So you're still gonna, just as Marty said, you'd just rather put money in savings and collect that high interest rate. And I think a lot of that continues to play on and will continue to be like a headwind for equities, which then in turn will continue to be a headwind for crypto for nothing other than loose capital is just not being deployed anywhere, right? It's just kind of sitting idle.
Yeah, agreed. I think if you can collect 5% pretty much risk-free, why not? Over the next few months, at least over the summer period, we can just relax and, So again, it's interesting to see where liquidity flows, and certainly, watching the reverse repo facility on the TGA as well, and just looking at money markets, flows into money markets, in and out of money markets, and into equities. I think it's certainly going to be worth watching where liquidity is going in terms of global markets as some form of sign, potentially, as to what's in store for the cryptocurrency space as well.
All right, guys, we got a few more minutes. We had a couple questions, but the oyster himself, the DeFi king, the Pepe hater himself is now a speaker. What's going on, man? How are you?
Hey, mate, it's good to hear from you. How's form?
Everything's good. Everything's good. What's going on? You got a question?
I was going to ask, you said that if vol was to fall below 20 in crypto, you'd have to move to TradFi markets. What would be the first market you target if you had to leave crypto? For selling
I wouldn't leave crypto forever. I would leave crypto until vol came back above 29.99. I mean, right now the new shiny toy is AI, right? So you could play tech stocks, that's like my favorite, right? I'm from California. I know all of these companies. I know everybody who works at these companies. not like the CEOs and that, right? But devs and things like that. That would probably be the space that I would go into. I would go back into tech stock trading. I wouldn't do commodities. I wouldn't trade corn and oil or anything like that. I would just stick to long chips. That was my play January and March. I was pretty vocal about that. I was just long leaps and long outright shares of NVIDIA and AMD. Not really a big fan of Intel at the current rate, right? When ARM is making these silicon chips and Intel's still, I don't know, building gaming PCs and i9s and stuff like that, right? Go look at NVIDIA's supercomputers and even their little in-house box that they sell for like 50 Gs. It's all run by an AMD processor. It's not run by an Intel chip. So that would be the space that I go into.
Yeah, I hate to take sorry, thanks for the feedback, but I hate to take such a big pivot, but just to get a quick question into XO if he has a second. So last year, or especially in the bull market in 2021, we saw, Bitcoin and the crypto markets correlation with the equity markets increase to a pretty significant level, and a level that you could pretty confidently trade against. Now we're seeing this fall off to its Bitcoin correlation to the S&P fall off to its lowest level since June. I know we as crypto people kind of hope that Bitcoin is uncorrelated to the traditional markets. I know my background, I kind of think we will always trend towards being correlated with traditional equities. But where do you think that over the short to medium term, we're going to end with this cryptocurrency correlation towards traditional equities? Or is that something you even think about or care about at all?
I think ultimately the first thing you have to look at is what catalyst drivers are there for Bitcoin. I think we've all, pretty much anticipate the halving happening next year, which could be a bullish catalyst. When it comes to correlations, I don't marry any biases when it comes to correlations. I think I just have to look at the whole wider perspective of markets and ascertain essentially. When I'm looking at Bitcoin here and when I'm looking at equities, I'm questioning what is going to be the driver that could pull the market down. At this moment in time, I don't really see anything, but that's just an immediate bias. But mid to 3 to 6 months out, I think there's a chance of a possible recessionary risk event. Now, when it comes to the correlations, like I said, correlations are always there. Sometimes they're stronger, other times they're not so evidently clear. But I think ultimately that's partially where, do I base my trading based upon correlations? Not at all. I think it's just more of an observation. I don't think it's something that one could essentially create a form of strategy or act upon, the correlation in itself. I think if one did, then you're really asking for trouble, in my opinion. I think it's just something that I observe. And when it's there, great. When it's not there, okay, let it be. Ultimately, I still believe Bitcoin is a beta asset class to the equity market. My good friend here is listening to TXMC. He put out a very compelling piece about the relationship between Bitcoin, the manufacturing PMIs, and the halving. And that really makes me question, well, is the halving just a byproduct? Is the Bitcoin rally just a byproduct of the halving? Or is there some underlying forces that we assume to be the halving, which is a catalyst for Bitcoin, but is it really something else? And again, when you look back to 2018, the Fed did go through a phase of QT. We saw Bitcoin fall from 6K to 3K. And back then, I think the consensus was, well, this is all the whole debacle around Bitcoin mining and Bitcoin Cash, and that's why Bitcoin went from 6K to 3K. But really, if you look at the 10-year real rates, there was actually a good correlation there. Once the 10-year real rate started falling off, in 2019, well, especially, post-2020 COVID crash, rates got slashed, markets just rallied, went on a tear. So, again, I think it's not just the correlations itself. There's so much more plumbing under the hood, such as understanding where money flows, how money markets work, and capital flows, and the bonds and the yields. Having, I'm definitely not a pro in bond markets or anything like that, but I think just having an appreciation from a high level perspective has helped me become more pragmatic in my approach to trading markets. A classic example is October, November, recognizing there's some serious risk in the market. It's time to GTFO. and go into cash, and that's essentially what I've done. And again, I think over the next 3 to 6 months, I'm looking to become a buyer in the market, but yeah, I'm just remaining very, very cautious as to what's happening. Correlation or no correlation, I think you have to trade each market based upon its respective technical levels.
I do want to add one thing with correlation that can be worth looking into for people. There is a subsector of correlation, which is basically conditional correlation. And it tends to pertain a lot towards like risk management. But one of the reasons why you may or may not be seeing correlation go down between, say, equities and cryptos is mainly as a function that, say, I'll use the S&P as an example. Months ago, we were more in the 20 to 30 handle range for the S&P, and right now the VIX is at 13. And I don't think it's any surprise on this call that we've been talking about crypto's also been at more or less all-time lows of volatility. So when you take two assets and their volatilities tend to drift down to their lower bounds, the correlation between those two products will start to drop off. And so you have to take a look at different volatility regimes and how these two products react to each other within these two volatility regimes. And then you can kind of map out your conditional correlation and sort of becomes more explanatory, at least from a quantitative perspective. I think XO gave a lot more like fundamental aspects to it, but if you're looking purely from a quantitative side, you can break it down by volatility regimes and you're likely to see more clarity in there.
Yeah, I think that's actually a really good point I hadn't thought about. And even if we just think logically with lower volatility, we probably have less certainty in these correlation ratios anyway. But thanks.
100%. Yep. Yeah.
Yeah, that's a great point. Absolutely.
We got to wrap up pretty soon. Premia team, we got a couple more minutes, or get the fuck out, Marty.
Take it.
Look at Telegram. I sent you a Telegram to ask politely. Yeah, I've had a couple more questions. The first one, I guess, is for Tolga and I. A decent question for the end. Tool recommendations for beginning options trading. If you're just looking at starting out pricing options and you don't want to get super crazy in the math and you don't have, an AWS subscription or a computer to run, Monte Carlo or whatever, the CME has a universal options pricing calculator where you can go onto various websites and manually pull the data, or I guess you could scrape it, but then you can input all manually into the CME calculator and it spits out this Black-Scholes model pricing, which is essentially entry-level pricing. Lots of people still use it. Lots of protocols still use it to price options. I don't necessarily think it's the best, but it's a good place to start. So that's the CME Universal Options Pricing Calculator that you can, you can go on Premia, you can go on Lyra, you can go on Deribit, you can go on, Interactive Brokers, whatever you use for TradFi, and you can see if this option is priced necessarily correctly, right? Or is it way off? And if it's way off, maybe you can make some money from it. Another one is Straddle with 1D, straddle.xyz. Again, that's with 1D. It shows DeFi and CeFi options exchanges and some simple ARBs that you can take. The issue with that is capital efficiency because you have to have money on various exchanges at different times and have to meet margin requirements on various venues. Some are full collateral, some are not, especially when selling options. That can get a little risky if you're not fully collateralized. Those would be the first two. I also have a pinned tweet that has some books from beginner to entry level. Some have nothing to do with options, some are a story, and some are full graduate level derivatives books. Like I said at the beginning, if you could read 2 or 3 of those entry level, volatility trading books, then your simple questions would be answered, right? You would know a lot more than people on crypto Twitter because people think options are this black box that are not supposed to be touched, which I don't think that's necessarily right. There's some simple strategies you can use and implement either to hedge or to create some sort of income on your holdings. especially with Bitcoin, right? There's no staking for Bitcoin. You're not getting that, whatever it is for ETH, 5 to 7% annualized. Does anybody want to come up? Last week we had somebody come up, Fugazi Trader. That was cool. He had a couple good questions. We had the DeFi guy today, and does anybody else want to come up? Or any questions for Tolga? Any questions for XO? Or XO, you have any questions for me?
I do actually, Marty. It's I'm going to come at a noob level here. I'm going to throw this curveball question at you. How much time or dedication do you think it would take to get up to speed with, say, trading perhaps volatility in the option space within cryptocurrencies? Let's just say Bitcoin, for example. What kind of time frame would one be looking at in terms of hours, just to get a basic grasp and have a level of competency to start placing trades in the market?
Since you're already like a directional trader and you understand how markets work, it just depends, right? Options can be the deepest, darkest hole that you ever go down, and you're like, oh my God, I never want to go down that path ever again, right? Of learning them. There's various calculations, equations that come into play later that essentially the computer solves for you, right? You're not doing math by hand anymore. If you're just looking at simple strategies like, I don't know, selling covered calls, you could figure this out in like 4 minutes, right? It would take you 4 minutes. Oh, I have one Bitcoin. I can sell one call or one put and sell a secured call, covered call, and oh, cool, I can make whatever it is, $50, $100. Oh, wow. Okay, now if I have 100 Bitcoin or 1,000 Bitcoin, right, that really starts to add up. If you start coming into this, oh, I want to be a full volatility trader, I want to be a full quant, essentially it all has to be automated, right? Because you're competing against computers. You're not competing against people clicking buttons anymore. There are still people that click buttons. God bless their soul. I hope that they do some automation for sure. In terms of hours, I don't know. It could take you 4 minutes to learn a simple strategy. You could blow your account in 2 seconds, right? You could put on the wrong trade and blow out your account for sure. In terms of understanding, in terms of doing it correctly, years, right? I'm still learning today, right? There's always new things coming in. Right now, we're looking at reinforced learning algorithms, RL learning. This is the new shiny toy in the vol space. But to make money consistently, to do some simple yields, weeks. You can learn some simple strategies in a couple weeks, in a week.
I think one of the parts there that's interesting you mentioned was you don't want to become a vol trader at day one. Vol trading in itself is not an immediate. You don't want to go to that. That's 0 to 100 real fast. I think Marty talked about like taking simple trades. Understanding how a simple trade works is probably a good way for people to understand things. One of the components I think people misunderstand on day one is how an option price, what components go into it. How does it move? So like the Greeks are a relatively great place to start by just owning an option and understanding what these Greeks mean. Because if you understand what the Greeks mean, then you'll understand how the option is moving in price because of these Greeks, they're explanations to you of what this option will do given some sort of action or reaction in the marketplace. And so that's like the key in understanding the components to the price, because all you see is this one single price. And so you need to figure out where is this number coming from, right? It's not a linear delta one product, right? It has other components to it. And so then that's going to start the exploration of, oh, how do interest rates affect things? How does time affect an option, all else being equal, right? And then once you get through all of those and you're comfortable with that phase, then you can step into more, as Marty mentioned, like covered calls is a great simple trade. Another one that's also very user-friendly are spreads. Spreads are very defined trades, and they generally will have a limited capital outlay, and the position is extremely defined in terms of your upper and lower bounds of P&L. And spreads on top of that tend to have something a little bit more that you're used to, which is like this directional bet. They're a little bit more directionally bet friendly than, say, outright buying or selling options, which can be a little bit more trickier and hard to figure out which one to buy and sell. But that becomes like your layer 2 or level 2, right? Now all of a sudden you need to understand the difference between the different options. There's a lot of options, right? You look at them and that gets people very confused. You see an expiration and you go, wow, okay, there's like 10 different strikes. Which one do I choose? Like this, I don't know what to do, right? Kind of deer in the headlights. But if you understand just how a single option works, then you can apply that to how all of those options work. Because if you look at all of them, they're actually all different. They do different things. They're in different spaces. They have different characteristics. And you'll see that through the Greeks, right? You'll see exactly, oh, this one has a much different delta than this one. Okay, I know what that means, because now if ETH goes up, I know what each one of these options are going to do. They're going to do something different related to spot movement. And then you can start to pick apart these options of like, okay, these are the options I want to look at because these have the characteristics that I really want to extract or put a position on. So it's kind of like just this building block of just like one layer at a time, and it's never ends, right? Marty said like you're always going to be a student of the market.
It goes super deep, right? And maybe you scared them, Tolga. I don't know. Maybe you scared them with that explanation.
I'm sorry. I tried to kind of ease into that. I guess that didn't work.
No, that's a good way to start. If you did bullet points, like you understand how options are priced and you understand the Greeks, and then you can do some simple strategies before you become like, oh, I'm going to be a full automated vol trader by tomorrow, right? Of course not. And like everybody else, everybody's still learning, and as time goes on, you're always going to be learning. Regimes change, new exchanges, new things, new products to trade. When it comes to super basic, that's where I would start, right? Understanding how the options price and putting on some simple strategies. With money you can lose, but I like that point with the spreads. If you're going to make a directional bet, it should be with spreads because you have a fixed P&L, right? You can only make so much and you can only lose so much. That's a good pro tip.
And the other pro tip is to join Marty's masterclass, right?
Yeah, we're going to be selling that for whatever Chimp is charging, but we're going to double it. And that's it. No, it's free for everybody. We're going to be on the Premia educational site, adding new content. Right now we have some basic and intermediate strategies, but more theoretical, not necessarily what I'm looking at, how to approach it, which options I would pick and when or why. That would be coming out, I think, the end of the month for the first one, and then we'll continually release those throughout. And XO, if you have any questions, just I'm always available. Ping me.
No, it's I'm really looking forward to learning options, Marty. When I set myself a task, I always put my head down and try to absorb as much as I can. So, generally, really excited to see what you guys are offering and where I'm going to be in 6 months' time. Be awesome to look back in possibly at the end of the year just to figure out the journey and how far I can get or how far I can go before blowing out.
We're always here. The guy who asked the question last week, Fugazi, is here again. Let's see if he has another question. And then we'll wrap up. Fugazi, can you hear me?
Yeah, how goes it?
Oh, hi. Can you hear me?
You're back.
Yes, I'm
Welcome back to the show.
I thought I'd come back for a second one.
No worries. You're the last question, and we're gonna wrap up. What's going on, brother?
Right. Yeah. So, where I'm from, there's a lot of like these option trading desks, and it's just people, watching at these option tables and trying to manually click buttons to like scrape some profits off everywhere. And what I'm wondering, since you're doing more algorithmic type of options trading, is like are these options traders in the crypto market already? And like do you know any about like these like where I'm from, you have like Optiver or IMC, like these huge players that like run like loads, like more than 50% of most big markets. Like, are they here? Like, are they big competition? Like, like as a new participant and like as a new market, I'd really like your view on that. And I think you probably know some people or maybe some offices that are already in the space. So yeah, I'm wondering.
What are the question is what is the largest options desk right now in the crypto
Well,
space?
like, what is the expectation of like being a new participant? Like, is that like could we like what they're doing is like manually like trying to like build a reversal and then like take the long futures underlying and like make like one tick on on the whole trade. Like why are they here and why are they not here? Like because the cryptocurrency industry is really inefficient from in most parts, and so yeah, do you happen to know any um, large market because I've heard that they're looking for positions, like they're trying to hire people to like for the cryptocurrency market. So yeah.
I think you're asking more like programmatic specifically, correct?
Well, I mean, they are really like clicking, like like literally what I told you. Like they're like building a reversal, like selling or like buying and selling, like a put and a call at the same strike, or no, but buying and selling a call at the same strike, and then like buying the futures underlying. Um, for like one tick. And this is something you could do on the cryptocurrency market because like the spreads are like what, like $5 or $10 on on like a call. So
Even higher, sometimes even higher,
yes,
depending on the
yes.
location.
So
No,
like
the biggest players in this.
yeah, that's
Go ahead.
like yeah, it's huge. Like you could just build these reversals and like make $15 just by buying and selling the same one, the same contract, and then doing buying the futures or like or doing it the other way. Like why are they not here?
Uh,
It's
I'll say one thing. So like outside of like Deribit, which is like the main, and their options are obviously composable. When you start going between like DeFi and Deribit, those are not as composable. So like you can like delta out, you can hedge out the risk that you have and pocket the spread, but you're still from a collateral perspective, like you're locked up the collateral in two different positions until expiration, right? So it's not the most collateral efficient way to like pocket, $15 between two different platforms. I think that's probably one of the biggest reasons we don't see it yet.
No, there's not a prime broker. I guess the simple answer to that is there's why hasn't it been arbed out yet? I mean, people are doing this, right? Desks are doing this, individuals are doing this. It's just eventually it will get arbed out over time. Once there's a prime brokerage that in crypto that does CeFi and DeFi on one margin, essentially, right? On one platform under one margin, this will get arbed out in 2 seconds. Nobody wants to lock up, I don't know, 10 grand to on two different exchanges at the same time. So let's say 20 grand to make $15, right? If you can do that day in, day out, every second on a prime brokerage, of course they're gonna lock up 10 grand to make $15. Some bot will pick that up super fast. The largest market makers in the space, uh, just off my head, is QCP, Cumberland, Orbit. What was that?
GSR.
Yeah, GSR, right? They're making all these exotic markets. They're out there.
Intermute.
There's Genesis Trading, not
Yeah.
lending. There's big players that are in the space in the billions of dollars, right? And essentially all of this will get arbed out once there's a capital efficient way to do so. Right now, like I said earlier, there's Straddle with 1D.xyz. You can manually do this yourself. You can make the $15. You can lock up your own capital on two different exchanges. and mix to the $15, right? But nobody big, it's not even necessarily even worth the money or the time, right? They're printing hand over fist, but they don't need to go make that $15. So maybe it's for you to go pick up.
Yeah. Okay. So the capital requirements are just huge to scrape off these bids.
Yeah, basically, yeah. And once there's a capital efficient way to do so, then it will be leveled out, right? And it won't be there anymore. Just like every ARB opportunity, it gets ARB'd out.
All right. Great. Thanks.
All righty. Thank you, XO. Thank you, DK, Tolga, Fugazi. You want to wrap it up, DK?
Yeah, I'll wrap it up real quick. I want to drop. I don't know, Marty, if you have you opened up your Telegram or not, but we talked about a lot of different tools for beginners and options. So I'll put together a list of all that stuff because I actually have it all, and I have like a Telegram like grouping and all this stuff for like new options traders. So if you come into Marty's Telegram group later tonight, I'll go ahead and drop that list so you guys can have a place to start. And I think that if that's something you're interested in, and then that's a good place to start because it is difficult at first to kind of find out the signal from the noise in this space. But obviously, we've been in the space for a while, so we know which ones make sense and which ones are a waste of time. So that's all. Thanks everyone for joining. We'll be back in 2 weeks. Appreciate your time.
Thank you, guys. Thank you, XO. Talk to you guys later.
Yep. Thanks, XO. Marty.
Thanks, guys.
Thank you, guys. Have a good one.